And we are live. Welcome on your TVs there in Texas and Louisiana on the Smart Money Culture TV network, as well as streaming around the world on LinkedIn, X, YouTube, and all of the rest. Hope you guys are having a great morning. It is Friday morning. I hope you've had a great week. I was out yesterday at the GBA event. Good friend Gerard Daché has done another amazing job. If you are around today, you should join. If you're here in DC, you should join. It is at the Foreign Services Office. I think I said that right. 1777 F Street there in DC. I will be there with my colleague Randy. We're going to do some interviews. We had a great reception last night. A lot of important people there, including my good friend President Vitt of Liberland, my good friends, MAGA people that have been that I've known for years. It's funny, met some people yesterday face to face that, of course, we have been going back and forth online for years, since 2016 when Trump was running. So pretty cool to get together with people like that. Of course, other people at an event like this is the Government Blockchain Association. So you have a lot of enterprise type situations. You also have people there from the UN. The Undersecretary General is in attendance. Hopefully I'll be able to get her on camera today. We'll see. And then as well as a lot of other people, there's actually a number of people there from the UN. The UN has adopted the guidelines that the GBA, the Government Blockchain Association, put together in order to certify events, certify blockchains and stuff like that. So that's pretty interesting. Good event. I am looking forward to being there. As well, as you know, we have the the Consensus. Consensus Austin is coming up fairly quickly. It's May 5th. That starts on the 29th. On the 29th of May in beautiful Austin. We will be there and be reporting from there. We are partners of the event. I'm super excited about it. Make sure that you check that out. It's Consensus Austin. We do have a referral or a discount code. Let me see if I can pull it up pretty quickly. If you use Bruce when you're buying the tickets, 15% off. They're not cheap tickets, so I recommend that you do that. We also have a discount code if you want to come today at GBA. I'll put this up first. That's down here at the bottom, GBA discount code. And then if I hit this one here, boom, Consensus. So we'll have them one on top of the other. This is going to be an absolutely amazing event. I'm super excited about Consensus. Consensus is maybe the most important event of the year in finance. And it's super excited about it. Austin is beautiful. It will be hot. That's for sure. It is definitely going to be hot, but it'll be beautiful as well. So looking forward to that. Make sure you get your tickets now, because they're raising the price like every week. So the sooner you get your tickets, the better off that you are going to be. And they're, like I said, they're raising them as we go. So that 15% off is in addition to the discounts they're already giving. So check that out. Consensus. You can just Google it. Consensus Austin. Come see us. Of course, we're on TV in Texas. So we are expecting quite a big group of people there. And as well, we're doing our gala. So that's going to be pretty interesting. I guess I'll just run that real quick here while I'm talking about it, because this event, if you're in the business, and I can tell you even from the signups that we've had so far, the people that are registering, these are important people. These are the people that are making things happen. And you can see here right now, I believe I'm sharing my screen. So $650 off, and then plus you get your 15% discount if you use the code Bruce, and that's on the lower ticket. The Pro Pass, of course, a little higher, and then you have the Piranha Pass. But just look at some of these speakers here, and I know I've run over it a number of times, but you have Ripple here, you have ARK Investments, you have A16Z Crypto, you have Pomp Investments, you have Chainlink Founder, you have the Ordinals and Runes, you got the majority whip of the U.S. House of Representatives, you have the SEC, Department of the Treasury, commodities, future trading, on and on and on. What we have going on here, it is going to be a really important event. Brad Garlinghouse from Ripple. So don't miss out on that. And then, of course, our gala as well, all very interesting for everybody if they want to come. That is on the 30th, the Washington Elite Gala, our famous gala. We've done this one all over the world in some of the most exquisite places that you've ever seen or ever been in. The Washington Elite Gala. You can sign up here. That's Luma. LU.MA/Washington Elite, and you can sign up to join there. Let me see. I don't have a banner for that. Maybe I'll make a banner here. I'll go. Does that work? Whoa, there we go. Luma/Washington Elite Gala, and you can register there. We'd love to see you guys. Happy to have you join us. So all pretty wonderful stuff. The markets are looking pretty nice. If I do say so myself, the markets are looking pretty nice. Gold is a bit tepid. Silver is a bit tepid. The metals are kind of tepid overall. But crypto has bounced pretty nicely. Still kind of far down there, to be honest. But let me just look at that. Of course, we'll have Matt join us here in a minute. But I think this was the chart I was looking at here. Bitcoin Wisdom. This one goes way back. They changed their URL at a certain point to IO, I think. But this was back in the day. This is the chart we were watching. I guess it was the daily maybe I was looking at. Yeah. So looks promising. And of course, there is a lot of promising stuff going on. The dollar, though, is looking fairly strong as well. Although I do think that it's going to start tapping out. You can look over here. The Hong Kong Stock Exchange is up a little. It pulled back a little bit from when I first looked, but up quite a bit. And it actually came out. I read a report yesterday that that China had a secret massive military budget, and that could be fueling stocks as well. You guys know what that type of spending does. Oil is down again slightly. Looky here, 78.85, under that $80 mark where we came over. A bit. That it's kind of a psychological level. We were well over that for a little bit. Natural gas holding steady, but down a little bit. Let's see here. The futures, Dow futures, up considerably, up over 300 points. I think we're going to have a nice day on Wall Street. I think people are going to be pretty happy with what goes on there, unless something really happens. Trump has been really just on a tear on the trail here. Let's see here. That's not what I wanted to do. Trump. The Trump. You can't stump the Trump. Trump on the stump. There he is. He's talking.
We've seen what happened when Europe opened their doors to jihad.
Oh man, this guy. Okay. All right. Let's see here. Bidenomics. Anyway, he's out there doing it. I want to caution everybody a little bit on, especially right now as we move forward here. They want to divide us so much because we're much easier to control if we're divided. And the fact of the matter is, it's like I always say that wherever you go around the world, the average person population all wants the same thing, right? They want to have a family, they want prosperity, and they want a place that's safe to leave their future generations where they can have prosperity and a family too. I mean, these are just the universal wants of humans. And yeah, I get it. Oh, I don't want a family. You got, okay, fine, you get that too. Okay, but overall, otherwise we wouldn't be here. Okay, overall, people want to continue their line. They want to have a family. They want to have prosperity, and they want to leave something for their kids, leave a country for their kids. And so that's what we need to focus on. And over the next few months, especially as you see right now, they're gonna there's a lot of money involved. Okay, and there's not just elections in the U.S. There's elections in a lot of different places. Okay, this year over the next few months. And so there's a lot of money and there's a lot of power at stake. And when there's a lot of money and a lot of power at stake, people are trying very hard. And I actually talked about it a bit yesterday, but a lot of Americans are primarily being, and across the Western world even, are primarily being reactionary. And it actually goes back to those three things I talked about, the wants of people. You notice, like a family, prosperity, and a place to leave your kids, right? None of those really are like for trying to change the world, right? I mean, most people just want to live in peace. But there are people in this world, unfortunately, that want things different, and they're willing to do lots of things. They're willing to start wars. They're willing to pay a lot of people to do things. They're willing to do a lot of things to achieve that. And what happens is those people are doing stuff, and you get in this endless cycle of being reactionary. You're reactionary. This happens, reactionary. I talked about it with the protesters at the college. It's like the shiny thing. Like, never mind that the border is still open, that we're funding endless wars. Even more, they're talking about funding now. Never mind that the absentee ballots, the mail-in ballots are still going on. And also, we're on the magic electronic voting machines, which have been proven. I've played multiple times on here that those are not safe. Okay. But they're going to want you to, put these people in jail, and this is horrible, and it's going on, and I can't believe it, and what's wrong with these kids. And that's not the important thing. The important thing is that there's war going on in a number of places. I mean, a war with Russia, a proxy war with Russia is no joke. What's going on in the Middle East is no joke. And the people coming in on the border, an open border, you would be just really dense to not think that some of the people that we're fighting are using that to come in. Okay. I mean, it may seem like those wars are over there, but those are for keeps, man. People are dying, and that makes people upset. Okay. And so keep focused. We have a Congress that doesn't work for us. They do all types of things that we don't like, right? And we need to focus on that. These protests, they're going to have these protests over the next few months continuously. And I tell you again that the way that they treat these protesters now are the way that they are going, that apparatus of arresting and everything else, that's going to be there for you if and when you want to be protesting after the election. So be careful what you cheer on. And if people they don't want a war or something like that, guys, protesting war, I mean, war is horrible. War is horrible. And you're not going to have everybody that wants to support the war. That's it. I think that it's crazy to think that everybody has to lock step in line and support this war. And in the United States, we have a country where there are a lot of other people here. There's a lot of other people here. And frankly, I don't think anybody has the stomach to remove the people that are here. There's nobody really that's, Trump's kind of, I'm going to do this, I'm going to do that. But I mean, we saw it last time. I mean, we love the guy, I support the guy, but he's not going to deport 20 or 50 million people that are here illegally. I mean, I just don't see it. I don't see it happening. So we have to work with the people that are here. We have to work with them. Just like I always say about the people in war, we got to negotiate. We got to work with them. It's the way it is. So be careful about that. Don't let the divisiveness mess you up, because that is we're all humans, and we need to work together, and that's it. And one play that we can really make, because the central banking cartel finances everything, and they've taken over most of these countries anyway. And I talk about it more sometimes than others, but that's the situation we're dealing with. That's why we can't really control Congress or anything like that. Those guys are in control, and I can tell you from being in DC yesterday, it's very stark. I invite everybody to come here and visit me, and we'll go down and we'll look at a few things to talk about it. But there are ways, the monetary revolution, that you can be involved. And one of those ways is, of course, diversifying your money. I'm not a financial advisor, but the monetary revolution is real. And the way that you can participate in that is you get involved in blockchain, in different stocks and gold, stuff like that, that you can put your money so that you're not being diluted every time these guys want to fund something. So there's a lot going on in the markets. Let's bring on the great Matt Dixon of Eve, Eve.io, AI-powered, machine learning-powered market.
Good morning. Good morning, Bruce. Good morning, everybody. Very wise words from Bruce there.
Thank you. Thank you, Matt. Good morning.
I really enjoy the depth of your conversation. There's a lot of deep stuff there. So,
good to see you.
And you too. I'm going to jump straight in to present. I don't know why it's taking a moment, but anyway, we've got non-farm payrolls today. This is the one thing that we're I think the Fed's got their eye closely on what's happening. So I trust you can see my screen there, Bruce.
Yes. Nice.
So we'll just start with
unemployment rate. Yep.
Yeah, we've shown this one many times, but it is worth, we've got the non-farm payrolls coming out today in about, what time is it now? In probably a couple of hours' time. Yeah, just over 2 hours' time. We've got NFPs coming out. This is the thing the Fed, one of their mandates is to actually maintain employment, steady employment. So this is one of the things they watch very, very closely. They watch interest rates and prices, they watch employment, and they do actually watch market stability as well. So right now, the market is very stable. Right now, inflation is elevated. And right now, employment's in a really good place. It's 3.8, the unemployment, 3.8% the unemployment rate in the US. It's at or near all-time highs. And as we can see from here, it's at or near all-time highs. So this is where the unemployment rate has fallen to a very, very low level. And I think it's even lower than this chart's actually showing. This is out of date now slightly, but it's even lower than this now, as I say, 3.8. So somewhere around there. So what's interesting is that these, when you see a spike high in unemployment, it's always followed by recession. So we haven't really seen the recession to follow this spike high in unemployment that we had. So we see the spike high in unemployment actually follows recession normally, and that's what happened with the COVID crisis. Then you see a spike low. So for example, we see a spike low here, we saw a spike low here, followed months later by recession. Spike low here, followed months later by recession. Low here, months later, recession, recession, recession. Recession every single time without fail. It gets monotonous. Spike low followed by recession. The delays are sometimes a little bit different. Here you can see it's slightly more delayed before we got recession. Here recession was almost right on the heels of this spike low in unemployment. Same here. So right now we're seeing a real spike low in unemployment, and the recession should follow, we expect. So actually we'll just have a look. These are the non-farm payrolls that we're expecting today. So from 303, we're expecting 243,000 a number today. So a bit of a drop. Maybe this is first signs of the spike low in unemployment. So once you start to see unemployment beginning to pick up, then that is the time you'd expect recession to follow. So we need to watch very, very carefully. I said the other day, watch the interest rate decision. Well, right now, the thing to watch is the unemployment today, the employment numbers, the non-farm payrolls. That is going to be vitally important. It's a big, big market mover. Moves equity markets, and as Bruce said, right now, the futures for the Dow, the S&P are looking good. But let's just see what these will sway the market in a big way, and will turn the market on a sixpence or a dime or whatever your currency is. Turn it very, very quickly. So this is what it's going to affect initially is the US dollar, but the US dollar is linked to all these asset prices. So normally when we see continued weakness of the US dollar, we will tend to see a rise in asset prices. We saw basically a big ABC move up. We didn't quite reach our target, but we're very, very close to the target. So potentially we're already moving down. This dotted line here, the horizontal dotted line, is actually quite an important point technically. It's the top of this previous A wave here. And you see, you can potentially label that instead of A, you could label it as a 1, the B could be a 2, this could be a 3, we could be on a 4, then 5 higher in US dollar index. That's entirely possible. But that would be broken, that scenario would be broken if dollar index were to dip below this dotted line, because if this were a wave 4, it's not allowed to dip into territory of wave 1. So it's quite important, and that's why the price has actually so far failed to pierce that dotted line. It's just amazing how prices do obey these technical rules. And yes, they can be broken, but then once that price are broken, it actually changes all the targets, all the implications and objectives for the US dollar. And so these key levels, they are key levels, and they're what I would call points to place as barriers for your risk and reward, as potential turning points for price. So you place your risk and your reward there. Whether you're trading US dollar, whatever you're trading, these are important technical areas. So Bitcoin has got a little bit of a rebound. Excuse my croaky voice. And I've got a potential here, which actually is potentially really, really bullish if this setup were correct. So we have here potentially a triangle, and a triangle is basically made up of A, B, C, D, E. It's a counter trend. It's actually a continuation pattern. So when you get a bit of a pullback like this, it's not like this impulsive move strongly higher. They're overlapping moves, and each of the intermediate waves, interior waves, so for example, the A is made up of 3 waves, the B is made up of 3 waves, the C is made up of 3 waves, 3 waves for D and 3 waves for the E. The only wave which is allowed to either overshoot or undershoot the trend line is the E wave, and it did actually overshoot by quite a big bit. It's not allowed to overshoot much. This is probably about as far as it's allowed to overshoot for this triangle to remain valid. But if it is a valid triangle, then we would expect a very strong thrust to the upside from Bitcoin prices to new all-time highs above the previous high. So it's not confirmed as yet, and the break below is probably a little bit larger than I'm really comfortable with for a triangle, but it is allowed to break that support trend line there. But let's just see, today is going to be key. If we get some numbers that are favorable to the market, and I would say possibly we want relatively stable employment figures to keep the market happy. So we could get some good figures out and could see some buying back into Bitcoin. But we've recently seen a bit of selling. So there's been actually negative flows on the Bitcoin ETFs in general.
Yep.
Not just GBTC, but the Fidelity also seen negative they've seen outflows. So negative demand there for Bitcoin. So that's really what's been driving the price down. It's obviously caused by those fundamental factors, by the Fed, and by the fact that we're seeing growth beginning to slow, inflation is still stubborn. So that's what's been driving Bitcoin. But I'm just hoping that this is correct. We'd all love to see a further rally in risk assets, and we'd love to see Bitcoin rallying to new all-time highs. Whether it's a triangle or not, either way, this still looks corrective to me, because corrective, as we always say, they're overlapping waves. So we can see this wave basically the move up overlap this wave down. It's all overlapping. And if we see just a little bit higher, we'll be overlapping again this wave here. So we couldn't possibly have 1, 2, 1, 2, 1. It's highly unlikely. They're not impulsive. There's no 5-wave moves in there. They're all 3 waves or multiples of that. So this is corrected down. So the outlook is, I've got a massive red arrow here indicating, I believe, soon, maybe not immediately, but soon we hope to get upside, especially if it's a triangle. And if it's a triangle, you can bet this move will be aggressive to the upside. But the only things that can really derail this at the moment, obviously, if we got terrible numbers out of non-farm payrolls, or if we did see a re-escalation in geopolitics. So let's hope none of those things happen at the moment.
I know. It's like the hold the breath, because the geopolitical thing can play in quite a bit. But things seem to be, we'll see.
Yeah, we'll see. You just never know. Normally when there's, when everyone's jawboning and there's talk about trouble and escalation and so on, then they turn, as you say, Bruce, people need to talk. And when there's talk, and even if people are jawboning and talking aggressively, still there's talk going on. And whilst there's talk, there's probably no particular action. But it's when things are quiet, that's when people are planning something very often. Yep. And that's when usually you get a surprise. And even with markets, actually, it's very similar. Consolidations are basically lots of, up and down price action, no particular direction. And it's these types of consolidation where there's no actual real movement that then you suddenly see a breakout and see, particularly aggressive move. So. Yep. I wanted to look at, obviously we're looking at gold here at the moment, and potentially we've finished the ABC. We could be potentially pushing, or we could just continue this consolidation a bit. But once again, it's overlapping. And so I do think that we're going to see new all-time highs. And bear in mind, this is the all-time high, the highest price ever achieved, whilst we've been tracking gold. And that is on the horizon in the very near future. So that's looking really positive. And then we look at oil, as Bruce said, we've got a very clear correction down in oil. At the moment, it's potentially a 3-wave move. It's quite aggressive. That can still turn into 5 waves as long as we don't overlap this potential first wave down here. Then potentially we could have much lower to go. But if there's any trouble ensuing, any trouble with geopolitics, we'll see. Obviously, this will be just a correction. So far, we've got an A wave potentially. We measured that. We transpose it to the start of this wave, which will be a B wave, and then we're moving down. So the ideal target, if this is an ABC correction, would actually be $77, and we're quite close to that. We actually dipped yesterday to 78.37 on the price of oil. So we're quite close to a real, solid potential target for the downside on oil, and we could see a rebound. So, that wouldn't be ideal. We want to see probably slightly lower oil, stable to slightly lower. That would mean that there's less pressure on inflation. It means everything is a bit more affordable, and maybe there'll be less upward pressure on prices that households are suffering with, as Bruce mentioned yesterday. Actual expenditure for households has been really, really elevated. And so if we see lower oil prices, hopefully that would be helpful. S&P reasonably, again, we did see that break of the long-held parallel channel. We saw a breakdown. So far, what we have is a kind of correction higher. So potentially, the top could be in, as we said. Potentially it could be in, or this could just be part of a larger correction. I mean, we could still just have another wave down. It would still be a larger ABC, and then we push up once again. So that's certainly on the radar for asset prices. And actually, I was looking at Solana, and just to look at a comparison, if you think of this as potentially from the top, A wave down, we're working on B wave up, and then we could get a further C wave down. That would still be corrective to the downside, and we would expect new highs, all-time highs once again, for the S&P 500, if that's the case. It has some parallels with Solana that I've got in here. Just to clarify, I've potentially got Solana as potentially an A wave down. We could still get a B wave. I'm just trying to expand this out. We could still get a B wave higher and a further C wave down. It would still mean that Solana is impulsive to the upside. So we still have the blue wave 3, which would mean this is an ABC down wave 4. So we could still go higher than lower, but then the next push up would be above this wave 3, above 209 for Solana, potentially towards the previous all-time high around 260. So I think we're actually in for a bit of a longer-term corrective mode, and that will probably make sense. While there is a lot of uncertainty right now in where the markets are going, where the data is, and we're watching, as I say, non-farm payrolls today, but there's all sorts of data coming out again over the next days, weeks, and months, particularly about the US economy, about inflation, which is going to be really important to keep an eye on. These are things which will maybe keep markets in a choppy, corrective kind of phase. And then if we do start to see maybe a decline of inflation, then that would allow the Fed to then lower interest rates, and that will give the markets the pump that we're talking about now to potentially new all-time highs, even for Solana of 260. So my kind of preferred outlook, and again, we can't be certain about anything, it's all probabilities, but my preferred outlook right now is that we've had an A wave down, which is clearly 5 waves. It's a legal, perfectly valid 5-wave movement to the downside. I'm expecting we'll see a 3-wave move up to the upside in not just Solana, but across risk assets. So I'm expecting some positivity short term. Then I think another sell-off, a little bit lower. But then following that, I think that is the time that we start to see inflation falling off in the US and around the world. That will actually allow them to lower interest rates. When they lower interest rates, it means the cost for businesses are much lower. The outgoings for consumers are that much lower. There's much more money to spend. There's more money for expansion. There's less of a brake on business expansion. Housing is more affordable because interest rates are lower. So that'll be very, very positive for the economy. And I think that is the time we then see a really solid push to new all-time highs for many of these cryptocurrencies. I won't say most, I'll say many of them. Certainly for Bitcoin and some of the majors, we should see a push to new all-time highs. So yeah, medium term, I think it's going to be choppy, but longer term, it's looking really positive. So we're seeing a good bounce back today on the memes. So Bruce's favorite is actually one of the laggards today, or well, it's not doing too badly, I suppose. On our charts, up 0.3%. I think Bruce will be showing a higher mark.
Just wait.
Just wait, yes. I'm sure we'll get more. So if we get a bounce up in a B wave here, it's going to be quite a solid bounce, I think. I mean, you know, if we were to move towards this sort of area, we've got 162, and it's not a real target, but I'm just saying a B wave could easily move to there. 160 odd with 137. You know, it's a good percentage higher potentially. And the same with most of the assets. So Bonk was a massive performer yesterday. It's still doing really, really well today, up 3% today. Yeah, across the board, they're looking quite good. So XRP also has taken a bit of a turn. We went into that sort of stop loss territory once again, where looking at previous price levels, this was a sort of area where people are going to be in their long positions, but they'll have stop losses here to stop them out if the market goes down. So we entered deep into this stop loss territory. It would have taken out a lot of longs in the market, and that's what the market makers and the big whales, that's what they want, and the exchanges, that's what they want to happen. They don't want everybody to be long this token if prices are going to go up, because it's effectively money out of their pockets very often. What they want to do is take the long positions out by dipping prices, and that's why you get these spikes, which basically explores lower price territories, takes out stop losses, takes out all those long positions, and then they can freely move the price up without worry of everybody being in the market. It allows them to actually, when they take out these stop losses, it's allowing them to pick up a lot of stock, whether it be cryptocurrency stock, whatever it is, it allows them to pick it up at rock bottom prices. So that's why they're very happy to actually really force prices down in these spikes, which are, you know, it just forces people out of the market. They're forced liquidations, especially if people are leveraged. A lot of people are forced out of the market. It allows them to pick up stocks at rock bottom prices, and then they hold them. And that's the way the institutions fare better than the retailers, because they actually have a clear picture of what's going on in the market. So as we've said before, it's like playing poker, and they can see your hand, and they've got a massive advantage. So it's not really a level playing field. But what we need to try to do is try and think like the institutions think. And so everything's looking, most things looking positive today. eBay up 1.5%, which is nice for me to see. Algorand is one which is it's down 0.1%, but no doubt if we see a B wave recovery, it'll come across all the assets. So a lot of these small negatives that we're seeing, I think, will turn positive. So I think we're probably going to get some good figures out today that the market will like with the non-farm payrolls. Litecoin, another of Bruce's favorites. Again, we didn't.
Litecoin is the right coin.
Absolutely. So we, again, didn't see any dip beyond. This was the stop loss area, and we can see the previous spike lows here and here. That's what defined the stop loss area. So people have stop losses. First of all, at this previous level here, they have stop losses just below. So price went down and took those stop losses out, but then the next level of stop losses will be below the previous spike low. And these normally wouldn't be surpassed. But we know that the market makers can see your hand, they know where your stop losses are, and they will very often, as we did here again, spike prices just below that previous support, take out all those long positions. So these will have been people who are long in the market with stop losses in case prices go bad, stop losses in this zone. And what they did, they spiked it just beyond the zone to really make sure they took out all of those stop losses, collected everybody's Litecoin at the lowest possible price at the time. So the big whales, the market makers, they collected people's retailers' Litecoin when they stopped out at these levels. So when they're stopping out, if you're longer position, you basically you basically have to sell it when price goes down. So what you're doing, you're selling into the hands of the market makers and the whales at the lowest possible prices, and that's why you see these spikes. So they just collected your Litecoin at the lowest possible price, and then happy to see the price go up. And then often when we get above this level, you very, very often see even retailers start to pile back in, and then the price will push higher, but then price will again spike into that stop loss area with a spike again, and once again collect all of these retailers' money. And then a lot of retailers begin to lose confidence, and that's when the price could potentially really then take off to the upside, because they want to effectively collect all the retailers' positions at the lowest possible prices, and then price is free to pump higher. And that's the way they work, unfortunately, working against us. So looking at ICP, which again is one of those favorites.
ICP.
Yeah, it's one of the great favorites. Again, it's down 3.3% today. Let's hope these non-farm payrolls today do turn things around. I really have a strong feeling that they will. We knew the other day it was going to be challenging going into the Fed decision, the Fed rate setting meeting, and it was challenging. But it was the fear of what they were going to say rather than the action that actually was delivered that caused the sell-off. So again, it was a kind of buy the rumor, sell the news effect, the opposite way around as we discussed the other day, sell the rumor, buy the news kind of thing. And we saw the market sell off really, really sharply before the Fed rate decision. Then when the Fed rate decision came out exactly as expected, I mean, think about it, nothing changed.
Right.
The Fed didn't change rates.
We all knew what he was going to say. We all knew it was going to happen.
We knew exactly what was going to happen. We even knew what he was going to say, because there's not an awful lot else he could say. And in fact, all he did was regurgitate all of the existing numbers that we all know about. We knew what the levels of inflation were, the levels of employment, everything. We know all the data, but he didn't really have a lot to say, because there's nothing to say at the moment. We just need to wait and watch for future data. So right now they can't do anything. They're in kind of no man's land. They need to wait for future developments. But as I said, my thesis is that we will see the economy slow, and that's why it fits in exactly with the price action that we're seeing and we're forecasting within the cryptos. The fact that we're within, as I said on Solana, this big ABC movement, which is corrective, before we then see massive push to the upside. So if we see a C wave down, then we should then see, following that, a massive push to the upside. If we see, a C wave to somewhere down here, and we just put in a C wave down there just for you to see. Doesn't matter, it's in blue. It should be in red to match the others, to be honest. So we'll just put it in there, just so that it matches the others. So potentially we've got A down here, which is complete. We're working on a B wave up, and then we'll get a C wave down. Then following that, we should get, I believe, when we see the Fed and the rest of the world start to reduce interest rates to try to stimulate the economy, initially that will be a great sign, and money will be flowing freely once again. They might even go to money printing. In fact, I believe they will go to money printing again. And remember, when they print money, it just means there's more money slushing around in the economy, more money to flow into risk assets. It's got to go somewhere because they want to make money out of this money. So they'll invest it into assets where the price is going to pump the most. And actually, crypto will probably benefit more than any, because crypto is the most volatile. It is still an emerging asset class and still has the greatest volatility. So when times are good, crypto gains the most. When times are bad, crypto loses the most. But if we see some good times with more money sloshing around the system, then when it flows into crypto, again, being an emerging asset class, yes, we know the market cap of Bitcoin and so on has increased massively, but there's still, compared with other markets, it's still relatively small. So there's a lot of potential for upside still. So that's what I'm hoping there. And BNB, we're always talking about BNB, about how positive it is, how positive it is, and how positive it is, great model there. And we can see it's just a correction at the moment. So BNB is actually probably more positive than most in terms of the potential. Again, we could still see, a little bit more downside before a massive push to new highs on BNB. But it's the consolidation has not seen it push down much at all. It's not come off much from its highs like a lot of the other cryptos. So BNB is fared among the best, and we can actually see it's one of the few. Right now on screen, there's hardly anything in positive territory, and that's actually a good sign. I think it's buy the rumor, sell the news ahead of these employment figures. I think all these negatives, I'm hoping they're going to turn positive once we get the employment figures out. But BNB is remaining positive. Bonk is remaining positive, and Near Protocol as well, which is another good favorite. We'll just have a look at their chart. Yeah, once again, looks like corrective to the downside. So we can see strong impulsive movement there to the upside, strong movement upside, very choppy movement downside, with a spike to collect stop losses that we always talk about. The spike price is lower here. And a spike, the way these candles work, just I'm sure most people are aware, but the solid body of the candle, what happens is the price opens at the top of this green candle, for example. The price tested higher in the early stages, then the price fell, and it fell all the way down to here. But then before the candle closed, and these are 4-hour candles, so within this 4-hour period, price then moved up sharply and closed here. So the solid body of the candle is the opening and the closing price. And then what they call the shadow is the extent of how high and how low the price tested. So we can see here, it tested much lower. And this is the market makers, the whales, usually the big players, knocking out stop losses where people are potentially jumping in long, trying to anticipate a movement up. But they've got stop losses just below the previous low, maybe here. And what they do, the spike price is lower, take out stop losses, collect your asset on the cheap, and then prices are allowed to move up freely to the upside. And that's exactly what happens. So when you see these big spikes, that's normally a sign that they're effectively spiking prices to take out stop losses. And that's why you see at the bottom and top of big moves, you very often see spikes in prices. So, all of these tops, you tend to see spikes, and also all of the bottoms, you tend to see spikes. So they're taking out either longs or shorts. So when they spike it down, they're taking out longs in the market. When they spike the price higher, they're taking out shorts in the market. And that's
And they
basically
do
the
that
way
all day long. Every
all day
chance
long.
they get.
That's the game they play. That's
Yep.
exactly what they do. And it's easy money for them because, as I say, they can see your hand. They know where your stop losses are because
They
you're
know
placing.
they know what your deposit, how you deposit, how much money you have cash sitting there, not sitting there, what you're in, everything.
And especially if you're in a leverage position, if you're trading futures and you're in a leverage position and you have a stop out just based on your balance effectively, and they know exactly how much you're holding on the account, exactly where you're going to get stopped out. So they can actually, they've got computer systems. They genuinely have computer systems which calculate if they were to sell a certain amount to push the price down to a certain level, how much could they collect at that level in terms of stop losses? And would it be more than they have to use to sell the price down? And
and this is where everything changed, because it changed a couple of years ago. It really did. Once AI was really operating like this, and remember the USDT and everything, it's all pretty much public information. I mean, they have more information than everybody else, but a lot of it's public information. But once these AI bots, you can see them at work on the DEXs. I mean, they're like trading sometimes 4 or 5 different assets at once to pull some profit off of things. And I'm not saying that this specifically when we're talking about the margins and everything else, but these AI bots that are built, I mean, these they can be pretty ruthless.
They're absolutely ruthless because they can take guaranteed profit, and it's actually horrible for ordinary traders, ordinary retail traders, and even people who run particular cryptocurrencies who actually, they've developed.
You and I know. We know.
Yeah. So they can basically do a kind of sandwich trade whereby when you put a trade through on a DEX in particular, they can actually see that trade go through. So if you go to buy $100 of an asset at a particular, well, it's not a particular price, you get it at market, for example. So you put the order in. Before the order is executed, these AI bots can work so fast that they can actually buy it before your trade goes through. So when they buy, it actually pushes the price up for your $100 order. It means that the price is higher when you come to buy it. So then when you come to buy it, they've also can actually sell before the next trade goes through. So they can buy and sell. They push the price higher for you. So when your $100 goes in, it then pushes the price higher again, and then they can sell before you have a chance to sell yourself. So they can actually get guaranteed, absolutely guaranteed profit. There is no risk for them. It's called arbitrage trading, basically, where you can even do it on different platforms, buy and sell at you buy at one price, you can sell at the same time at a lower price, or even if it's not the same time, before another trade can go through, you can actually sell for a guaranteed profit. So that's arbitrage, and that's what's made easily possible. They used to be able to do it manually over a much longer period. Now they can do it using AI over milliseconds, literally milliseconds, before you can even get time to think about what you're going to do next. The AI bot has actually done it. It's been in and out of the trade. And you can see they collect thousands of dollars per month, many thousands of dollars, millions of dollars, in fact. But, I've seen it just on individual tokens. I've done some looking into it. And
there's one, you can set up a bot yourself as well. Now, I will say this, if you've ever used any of these before, it's risky because you're using somebody else's code. All right. But there is one out there. I talked to these guys, Banana Gun. You can check them out. That's a pretty interesting one. If you do want to try to set it up yourself, you can. Like I said, it's risky. A lot of times you'll win, and then boom, it's all gone. So be careful of stuff like that. I'm not endorsing that. They were just one I came across.
Yeah, the only way you can be reasonably confident, I suppose, is if you do the coding yourself. And
Yes.
it's beyond me, probably beyond most of us, I imagine. But if you do the coding yourself, the problem is when you employ a coder, sometimes they'll build in a backdoor, and as you say, win, 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 win. And then eventually they'll wipe you out big, and that's you've got to be careful.
You're so happy, and then you're not happy anymore.
Absolutely, yeah. So yeah, that's pretty well it for today. As I say, we need to watch for now. We're only an hour and a half away, and I'll be watching closely what happens with NFPs. The American economy, the Fed will be watching very closely about the NFPs. Whether they have the news already, I don't know, but it's going to be quite important because this is I think, the catalyst potentially for the US to begin to drop interest rates. When I say it's the catalyst, they will need to see inflation under control. But as I said, inflation's dropped from 9% to 3%. It's already dropped very, very substantially. We're just seeing a little bit of stubbornness right now, but I think it will drop to a sensible territory towards that 2%. It should drop very soon. And then if we start to see a little bit of a weakening in the employment picture, then that will allow them. And they have said, remember, they're still expecting 3 rate cuts this year. They don't have much time. There's not many Fed meetings left this year. So to do 3 rate cuts, they are expecting. So as I said before, they can see things that we cannot see. They have data that isn't available to us as the general public at the moment. So they know what's going on a lot more behind the scenes. If they're now still saying there's going to be 3 rate cuts, I think they know that the economy is going to weaken. And actually, when I say things that we can't see, I think we can see. And I think people are just refusing to admit that the US economy is going to weaken, that all the signs are in place now that we're going to see recession later this year. And so as that recession begins to bite, before it gets serious, they're going to look for ways to avoid it. And the obvious way is going to be to lower interest rates. And eventually they may resort, and I think they will resort, as I said, to more money printing, which isn't good because ultimately it just means more and more and more debt. And it's all built on this. It's a house of cards. It's not sustainable, not good for long term.
Well, absolutely correct. And I want to invite everybody, if you are able to come to Washington, D.C., you should come. Because it's even a different place than it was years ago. And I think it's important for everybody to come and see what's going on. So much of the world's policy and power is here in DC, and I think it's important for you to see what's going on and to feel what's going on.
Yeah, well, I have been over there one time. It's obviously a tourist visit, and it's great. I should have met up. Well, I think it's actually before I knew you, but it would be great to meet up again next time. You can show me around and explain what it's all about. For
sure. Well, another great morning. ChatGPT codes. It does code. You're right, Steven. Steven Saltzman, my man. Good to see you, brother. Steven and I, we did an event. I think he's doing it again. Muse Meta Entertainment World there in Monaco. It was a lot of fun. It really was a lot of fun. Steven Saltzman, his father is the guy who wrote James Bond. He's the guy that did James Bond, if I remember correctly, if my memory serves me correct. Wow. But we did have a lot of fun out there. I think yeah, good times. Monaco is fun, as you know. Matt, you and I have been to Monaco together. That is yes. A lot of fun. Now, the tricky part about coding with ChatGPT is sometimes if you ask it to code for you, it won't do it. But the trick that I figured out is you say, now, what would this code look like? Or ask it a certain question, like, exactly. And then it'll code the whole thing for you. Like, it won't code it for you. Then like, well, what would this look like? Or ask it a certain type of question, and then that's the only thing that comes to mind at the moment. But there's other types of questions you can play around with it, and then it'll code for you. And it's pretty crazy.
So it's like speaking to your wife. You just need to ask in the right way.
You got to ask in the right way. Exactly. They're perfect at that. They know exactly how to do it. So funny. That's the same question 5 times, different ways, until they get the answer that they want. Either it's a good answer or it's, hey, stop asking me the same question over and over again. Anyway, another great show, Matt. I really appreciate you. We'll be back. Have a great weekend. Actually, it's Friday. We'll be back on the TVs here in a few hours, and we will be back on the Impact Money show. Are you staying dry out there? Are you guys dry?
Yeah, I was just looking out now. It's actually a beautiful sunny day. So we had another bout of serious rain. There's a bit of flooding. Roads were closed once again. I showed a picture on X yesterday. Someone going around on a jet ski in a car park. So yeah, there was some serious water. But yeah, this time round, nothing serious. People just enjoyed it, and the sun's back out. It's in dry out again. So yeah, It's good. So yeah, you have a great weekend, everybody. Enjoy. Thanks for having me. I look forward to next week.
Cheers.
All the best.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.